Hello, financial investors. My name is Brent, and today we're going to be doing our M1 Finance taxable account and the Roth IRA 1 month change for July 2019. We're going to be taking a look at the taxable account and the retirement account, taking a look at the stocks that went up or down, measuring the total performance for the month of July. We're also going to be taking a look at the activity, what stocks paid out dividends, where those dividends were reinvested into, and then take a look at our total valuation from our portfolio, comparing it to last month, and see how much the portfolio either gained or lost in the month of July. So, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I would highly appreciate it. I cover the stock market, dividends, and real estate. If you enjoy any of those topics, and if you do enjoy this video, hit the thumbs up. If you have any comments or questions, want to share what your portfolio gain or loss was for the month of July, drop it into the comment section, and let's go ahead and get into the video. I'm going to go ahead and flip my screen around here. We're going to quickly start off by taking a look at last month's performance for June 2019. Starting with the individual account, we can see that our equity was at $507.48. We had market gains of $45.80 and earned dividends of $9.33. Our total money-weighted return was 20.17. Now, jumping into this month's portfolio, we can see that our value has increased slightly from 507 to 517, a difference there of roughly $10. Now, looking at the market gains here, we can see here $53.22 versus $45.80. So we made right there our equity gain of around $8 to $10 there. Now, our earned dividends remains the same at $9.33 and $9.33. So mainly for between June and July, or mainly in July, the market gains is what caused our portfolio to increase in value, and that is why our total return has increased here from 20.17% to now being up 22.08%. Now, jumping over into the activity for the month. Now, last month we had the ex dividends for VU, ticker symbol VU, which tracks the S&P 500, but it didn't actually get paid out until the 2nd of July. It paid out $2.61. I took those dividends. I made a whole video on how you can reinvest your dividends with under $10. If you guys want to check out that video, I will have a link up in the corner. Check that video out. I took that $2.61 and purchased 0.00959 shares at $272.04 of ticker symbol VU, reinvested that, have no more cash sitting in the account. It's 100% invested. And now we are moving forward here from the individual account. That was basically it. This portfolio had a very nice return for the month. Now, this valuation here doesn't actually show it correctly because this is taken into account that we didn't earn or get paid out any dividends in July, but in reality we did receive our $2.61, but the way that M1 tracks it on a month by month basis, we earned it in June and didn't actually receive it in July, so the money weighted loss here is showing negative 0.45, whereas we did actually have a return here for the month. If we see here, we started the 1st of July at 511 and we ended here at 517, and we have a recording here of 507.48 on our last month, and now we're at 517. So this portfolio did have some return, but the way that M1 Finance tracks the money weighted return shows that as a negative for the month. Now, that is a taxable account. We're going to go ahead and jump over into the retirement account now. Now, retirement account, the Roth IRA, by using this platform, by using this specific account, I'm able to invest my cash into an account that'll tax shelter my portfolio. That means that all my dividends, my capital gains, my interest that is made within this account is 100% tax-free after I hit 59.5, and I've had this account open for at least 5 years. So in the future, this is going to be paying me out dividends that I will not have to pay taxes on, which is the whole goal of this portfolio. Now, the valuation in the video was at $15,198.73. We are sitting here with market gains of $1,227.64, and we have market gains there. Our total gain was $1,227.64. Market gains was $785.64. and earned dividends of $442. Now, from here, we're going to be jumping over into the Roth IRA account. This is all live right now. Now, valuation or total value of the portfolio went from 15,198 to now 15,876. Now, we did add some brand new equity here in the month of July. So the total value has been increased by doing an equity add. Every week we add $115.38 over a 52-week period. This is used to max out the Roth IRA account for the calendar year of 2019, where the Roth IRA allows you a limit of $6,000 per year. Now, if we take a look here at the market gains, we went from being up 785.64 to now being up 842.07. Now, bringing up our calculator here and taking 842.07 and subtracting our past market gains of 785.64, we can see here in the month of July, our market gains didn't actually increase too much. We went up roughly $56.43. But we can see that our earned dividends went from being $442 to now $493. So that is it's about the same difference there, but 442 minus 442, that's a difference there of $51.72. So this portfolio earns dividends every month. Now, those earned dividends are not exactly paid every month into the account. Some of these earned dividends that we sat through the ex-dividend, we've earned those dividends, but they haven't been paid out into the account. We will cover what stocks paid out dividends here in just a minute. And without that, so let's go ahead and take a look here. Now, our total return money weighted went from being up 14.59. We are now up 15.3%. So overall, we've had a nice steady increase, and we're actually positive this month. And we can see here that we made about $51.72. That's correct there per our math. And there's our market gains for the month. Everything's showing there correctly. $56.43 equity wise, $51.72 earned dividends, and our money weighted return is about 0.7%. But we'll cover the actual real value equity difference between the taxable and the retirement account, and then we combine them together and show the difference between on a month to month. But before that, let's go take a look at our activity. M1 Finance recently changed the dashboard, which is very helpful here. So you can go in here and put in dates. Now, we are going to be looking at just July 1st through the 31st, and we'll start off on the very first page here. So on the 1st of July, we deposited $115.38. We also had some dividends in the account. We were able to buy AbbVie, Caterpillar, and Eaton Vance on the very 1st of July. Now, from then, we also received some dividends that first week of July. We got paid out by Coca-Cola, 43 cents, Kimberly-Clark, $4.91. We also had another deposit. The next week, we had another deposit, $115.38. We made 4 additional buys. We bought 3M, Caterpillar, Eaton Vance, and Simon Property Group. That was on the 8th of July. From the second week, we also received some more dividends. We got paid out by Altria. We got paid out by Essex Property Trust. It looks like we had another buy here. And I must have rolled that Altria, that dividend that got paid out by Altria. Kellogg's at that time was down 6% or so in the portfolio. I took advantage of that little dip there. I believe was a good value. I went ahead and put $9.32 towards Kellogg's. Then Essex Property Trust paid out $3.16. Now, diving in here into the next page, starting back at the bottom, with Essex Property Trust and our deposit of $115.38, we continue to buy Caterpillar, and I made a video on why I decided to add in a brand new stock. I started buying Tanger Factory Outlets, so I mixed it there 50-50, bought Caterpillar and Tanger on the 15th of July. Now, jumping back down, we got paid out some more dividends. Cardinal Health, $4.89. Main Street Capital, 80 cents. WP Carey, $7.77. Now, I had $13.46 sitting in cash. I decided I'm going to go ahead and throw that immediately into the market. I bought Tanger Factory Outlets, $13.46, went directly into there. I made my deposit of $115.38. I made a single buy of Tanger Factory Outlets there. Now, I received this is where I started to get kind of creative. I took a look at my portfolio, decided I wanted to take profits on positions in my portfolio that were having some resistance points. So here on the 24th of July, I decided to sell out of some positions, not completely. I took profits. I only sold off 60% of my profits that I had received in these positions. So I sold off portions of my Apple and Cisco. These were only parts of my profits that I had made with my initial equity. And I had accidentally bought Kimberly-Clark here. I was supposed to put in a whole $201.02 into Cardinal Health here, but instead it picked up Kimberly-Clark. Now, because I had messed up, I also received some dividends there from Cisco, $4.43 on my next one the next day. I don't need to be holding that much Kimberly-Clark. I went ahead and sold off my initial $60 plus my $40 that I wanted to sell out of, and I sold off $99 of Kimberly-Clark. I sold out of 2 positions completely. Now, this was all the equity that was held in these positions. They were up 16%. Now, I could keep them in my portfolio, but I really wanted to use that equity somewhere else, and they were trading at 52-week highs. They were overextended. They've been having some resistance. So instead of just kind of keeping them there and waiting for them to fall back into a line with their true valuation, I sold out of them. I can always add them back in later, and I rolled those profits over into Simon Property Group and Tanger Factory Outlet. And I continue to receive some more dividends. Medtronic paid me out 45 cents. I reinvested my dividends from Cisco and Medtronic, $4.90. I picked up some Simon Property Group, and then my final week here in the market, I deposited $115.38 on Monday, and that went towards one purchase of Tanger Factory Outlet, and my Monday buy did not work. So on ex-dividend, I went out there and purchased Tanger Factory Outlet. So I did not get to buy this prior to the ex-dividend date. So I missed out on roughly $2 and some change from dividends that are going to get paid out here in the month of August. But overall, I was able to buy on the ex-dividend, which generally means that the dividend is pulled from the price, which dropped the price on the day, and we should see some recovery here in the future. So that is the change in valuation from a month-to-month basis, the equity gain and the dividends that we've earned in the month of July, and as well as a total return for the portfolio. Now, from this point, what I like to do is jump over into my spreadsheet. This is my current data for the month. Now, we added $461 of brand new equity into the market. We received $39.66 from all of our dividends. So starting with Coca-Cola, 43 cents, Kimberly-Clark, 491, and so on. Now, JP Morgan does not show up in this actual activity, but JP Morgan did actually pay me a dividend. It was due today of $3.49, so I'm including it towards July because it will be in my account tomorrow morning where I'll be able to use it. It was supposed to be paid out into the account, but M1 Finance is always late by 1 day. So in the month of July, I received $39.66 of just straight dividends paid out into the account. I also made that $2.61 from ticker symbol VU. So in the month of July, I made a total of $42.27 for the month of July 2019. So everything here, it was calculated. Now our total portfolio value here is at $15,876.68. And our return for the month. So what I did here is I take the total value of the portfolio, which is $15,876.68. Now I added $461.52 of equity into the market. So I want to go ahead and remove the equity that I've actually deposited into this account, and that is going to be my current valuation of my portfolio without the added equity. Now I go back and I take a look at my June number, and in June my final number was $15,198.73, which is in the video here, $15,198.73, and I go ahead and put it as my second value. Now the difference between last month and this month is a difference there of positive 1.41% difference there. So my portfolio equity wise without including the fresh equity that I added into the portfolio, it is up 1.41% for the month of July 2019. That includes the dividends and the equity that we made while investing in companies overall for the month of July. Now, I also went ahead and did the exact same thing down here. If I took a look at the portfolio changes for the month of July for the S&P 500 portfolio, now this one, I don't ever add any brand new equity into it. It's just kind of sitting there. So here, I don't have any money equity that I've added into this portfolio. And we ended last month at 507.48. We have it here in the video, 507.48. We're now at 517.51. That difference there is 1.96 rounded up. So 1.96 is our return here for the month. Let's go ahead and right here. 1.96 is the total return here for the taxable account. Now, with those numbers, that is actually fairly well. That gives us a really good balance number, and I actually did the balancing down here. So our total equity between both portfolios, the Roth IRA and the taxable account, let's go ahead, if I can zoom in here just a bit more. I know the spreadsheet's always tougher to see on mobile devices. So what I did here is, again, I took the total equity between both portfolios. I subtracted the equity that we added in the month of July, because I don't want to include that in my returns. That doesn't help percentage wise. And then I went back and took the total amount that we had at the very end of June, which is right here, $15,706.21. It's right there. And I went ahead and did the calculation. So between both portfolios here on the M1 Finance platform, in the month of July, we went up 1.43% market return. So that is the difference there. Now, I also record every single one of my buys and sells down here towards the bottom and kind of record everything. So in the month here, I started buying at the very beginning, my AbbVie, my Caterpillar, my Eaton Vance, and it kind of shows the difference that some of these positions I've taken during the month. AbbVie, from my initial purchase at the very beginning of the month, is down roughly 8.88%. This is our actual, where's our change here? So this is our change for the month. In the month of July, from the positions that I've actually purchased, I'm down roughly $14.38. But that is completely fine. If I look at my annual income in the month, I've actually increased my annual income by $65.47 in the buys here in July. And I actually track my sells here as well. So I've increased my dividends here by $65.47. But I also sold out of positions. I sold out of some Apple, some Cisco, some Coca-Cola, Medtronic, and Kimberly-Clark. And that is annual income there of $9.68. So $9.68. So my difference here, as far as my dividend income has gone in the month of July, I've increased my income by $55.79 in the month of July going forward. And we can actually see that difference right here towards the bottom. We can see here that my current annual income for the M1 Finance Roth IRA is $581.67. Whereas back here in end of June 2019, my annual income was $525.36. So I'm going to go ahead, I'm going to leave that calculator up. I'm going to go ahead and grab another calculator, and I'm going to just see what the difference is here really quickly. 581.64, 581.64, and go back into my June data and grab that and subtract. So 56.26, let's go ahead and bring up the other one. So between the month of June into July, this shows that I've increased my data with my buys and sells by $55.79, but our actual income has increased by $56.28. And why is that? Well, in the month of July, let's go ahead and go back into my live data, we actually had some dividends that increased. So here, we had Kellogg's increase their dividend from $2.24 to $2.28. Not a big increase, but it's an increase of 1.77%. We also had another company here Stanley Black & Decker, which increased their dividend from 264 to now 276. That's a 4.44% increase. And we also have our very last one here towards the bottom. We had Walgreens. Walgreens increased their dividend from 176 to 183. That's an increase there of 3.9%. So those three companies there was able to increase my total dividends going forward. And just by kind of allocating my reinvesting capital, reinvesting dividends, and just having companies that raise their dividend on a year-by-year basis, it was very nice. I was able to increase my dividends going forward by $56, which will help me kind of continue to compound this portfolio month after month and year after year from this point. You know, we're only a year and a half into this portfolio, and we're already seeing dividend income almost hitting $600. So I started this portfolio and have been doing monthly updates and weekly updates with you guys. So this is the power of investing in the stock market and dividend companies that grow and pay out dividends, but also give appreciation. I don't try and invest in companies just because of the yield. I look for companies that are showing really good fundamentals. They're growing their revenue, their net income, their free cash flow. They have a rate of return, a return on their invested capital that is positive over 5 to 10% or more. And they're either at a really good valuations, or they will get to a really good valuations where I can average down on these positions. And just over time, always have stocks that'll be down or negative. Take advantage of those dips if you believe in the company. AbbVie, I believe they're going to be doing really well here in the future with their merger. Altria, they're having a little bit of issues with their revenue earnings. That Juul acquisition was a little bit overpaid, but we'll see. We'll see how they continue to do. Caterpillar, 3M, those are the industrial companies that are just having some issues here with trade war. Johnson & Johnson is having issues with their lawsuit with the asbestos baby powder such situation. Still a really good valuation here. This is down 6.26%. You're going to see me starting to buy Johnson & Johnson here in the future because it is coming up on ex-dividend, I believe, in either August or, yeah, it's going ex-dividend here in August. I posted over on Facebook about this. I posted my stocks that I'm interested in August, and I will be doing a video here as well. Simon Property Group and Tanger Factory Outlets, these are both real estate investment REITs that are in retail. Retail's not doing it amazing. Cardinal Health, that's that healthcare sector. AT&T, Kellogg's, those are just positions. They're not terrible. I bought AT&T a little too early, and it got a little trigger happy when I initially started my portfolio, and that's why that is currently down. But I've been averaging it down when I could, and Kellogg's, it's only down 0.47%. That's basically not bad at all. So really, it's not so bad here, and they're all really great positions. So that is all I wanted to cover in today's video. If you guys haven't checked out my Facebook page, I have 3 Facebook groups you guys should be interested in joining. If you're interested in any stock market investing, real estate investing, or just dividend growth investing, head over. I have links down in the comment section of this video. You guys can join my groups, the dividend growth investing, stock market investing, real estate investing. Join the groups, and let's have some discussions over what you're either buying, what deals you're making on real estate, or just overall what you think of the market right now. So that is it for today's video. Let's go ahead and make this video big screen there. So thank you guys for tuning into this video. If you guys did enjoy this video, hit the thumbs up. If you guys have not yet subscribed to the channel, I would highly appreciate if you do subscribe. I cover the stock market, dividends, and real estate. And if you have any comments or questions, would like to let me know what your returns are for the month of July, drop into that comment section. I do appreciate all your guys' feedback. That is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.